So you want to make a move. You found exactly where you want to go. Maybe it's a new state. Maybe it's for family. Maybe it's a fresh start somewhere where the summers aren't quite so brutal. But there's one gigantic thing standing between you and that new life. And it's the house that you're sitting in right now. Maybe here in Orlando, you have to sell in order to buy. The hardest part of this whole thing isn't finding your next home. It's untangling yourself from this one without it costing you a fortune or blowing up at the worst possible moment. So today I'm going to give you the exact roadmap. I'm going to show you 4 different ways to make this move happen depending on your situation. I'm going to walk you through the emotional trap that's keeping a lot of Orlando homeowners frozen in a house that they've already mentally checked out of. I have been there and done that. And I'm going to warn you about the quiet deal killers that can sink the entire move. And the single biggest thing that decides whether this goes smoothly or sideways, it's not luck, it's not timing, it's the team that you put around you. You've heard that before, right? Like the people that you keep around you is the most important, something like that. That's going to be true for this. The people that pull this off without breaking a sweat, we are never doing this alone. So I'm going to call this your team. I sell real estate here in Central Florida, and I help families move in and out of this market every year. So I'm going to lay this out in sections, and I always timestamp my videos. So if you want to jump back to a part, click right to it in the description below. Section 1 is what selling actually costs here in Florida. Section 2 is the interest rate trap that a lot of us are in. Section 3 is your tools and the paths to make the move. Section 4 is the real cost of the move itself. And section 5 is the deal killers that I want you to watch out for. One disclaimer, I'm a real estate professional, not a financial advisor, not a tax attorney, not a CPA. That's way above my pay grade. This is educational and not financial advice. Your situation is yours alone, so always check with a local pro before you make a move on your specific home. And for the record, that is exactly what I can help you with. More on that later. Let's dive in. Before you fall in love with a house in Tennessee or the Carolinas or Texas, I love all of those states. It's part of the most beautiful part of the country. There's one thing that you need, and it's not what your home is worth. It is what you will actually walk away with at the closing table. Those are 2 very different numbers, and the gap surprises people every single time. Let's talk about equity, because this is where people fool themselves. Here's the hard truth about equity. Your equity is fairy dust. It does not exist until it is liquid, sitting in your bank account. You can believe your Orlando home is worth $600,000 all day long. You can point at Zillow, at your neighbor's sale, at what you need to get. None of that actually matters. The market does not lie, and buyers will tell you exactly what your home is worth the day that you list it, and not a penny more. This is no longer the craziness of COVID and 2021 and part of 2022. It's not. So whatever number is living in your head right now is theoretical. The only real number is the one that a buyer is willing to pay for your home. And even that isn't the number that matters most. The number that matters most is your net proceeds, your absolute bottom line, the dollars that actually land in your account after everything comes out. That's the number that dictates everything on the buying side. So let's figure out how to get it. You don't write a check at closing. The title company quietly subtracts everything that you owe from your proceeds before a single dollar hits your account. It comes straight off the top. The big piece everyone talks about is agent commission. Everyone knows that that exists, but the other pile of stuff that blindsides people, the stuff lumped under closing costs. Now here's where I have good news for you, especially if you're coming from a high tax mindset. Florida is actually one of the friendlier states to sell in. We do not have state income tax. We do not have state capital gains for your primary residence. And we don't have those like excess tax some states hit you with just for the privilege of selling. What we do have is something called documentary stamp tax, and everyone here just calls them doc stamps. It's the state's tax on transferring the deed, and it runs about 70 cents per every $100 of the sales price. I can get you a net sheet. You don't even have to like break out your calculator right now. Just message me. My email's in the description below. Just message me and I can get you these numbers. That is roughly 0.7%. So on a $400,000 home, that's about $2,800. Not nothing, but compared to what some states charge, we've got it pretty good here. Then there's the rest of your closing costs. Here in Central Florida, it's customary for the seller to pay for the buyer's owner's title insurance policy. That protects the buyer against anyone coming to claim that they own part of the property. You'll also typically cover the title and settlement fees, recording fees for the county, and a prorated chunk of property taxes for the part of the year that you owned the home. And if your home is in an HOA, watch out for that estoppel fee. I definitely let my clients know ahead of time when that comes, and they still are surprised. It's like just this mystery fee that the HOA just kind of like pockets. It can run from a couple $100s to a few thousand, but in Central Florida, if you are a homeowner, it's probably going to be closer to that couple $100, unless you're in like a crazy condo in like the very expensive part of Winter Park. So here's the number that you came for. All of that non-commission stuff together usually runs somewhere in the low single digits of your sales price. Once you add your commission back in, your all-in cost to sell here in Florida typically lands around 8 to 10%. On a $400,000 home, that's roughly $32,000 to $40,000 before the money ever hits your account, the proceeds ever hit your account. But hold on, because for most of you, there's a bigger number coming out. Your mortgage. If you still owe on the house, that loan gets paid off in full at closing. Right off the top, it's the first lien in the lineup. Let me show you. If you say you sell for $500,000, selling cost eats about $45,000, you still owe $200,000 on your mortgage, suddenly that $500,000 sale puts you around $250,000 in your pocket, not $500,000. And a quick heads up, your mortgage payoff is usually a little bit more than your last statement says because you owe interest right up to the day that it's paid. So ask your lender ahead of time for a payoff quote for your closing date. And the low equity folks need to hear this because nobody says it out loud. If you bought recently or you refinanced and you pulled out cash, you might walk away with very little after the payoff and closing costs. Sometimes it's almost nothing, especially the last like 1 or 2 years. Yes, it's ticked up. The sales prices have ticked up, but not enough over the past 2 years to offset your closing costs. This is one of the real reasons to have a sharp agent advising you. A great agent will give you that net proceeds number after your closing costs, after your loan payment. So you're deciding on a real figure instead of that fairy dust number that might be in your head. And sometimes a good agent will tell you not to sell yet, to stay put or to sell in a couple years and rent your home out. It really depends on your situation. One more thing that some agents leave fuzzy on purpose, and I do not like this, is staging. Who pays for it is negotiable and varies agent to agent. Some cover it, some split it, some hand you the whole bill. So never assume that it's included. Always ask and always get it in writing in your listing agreement. Now, let me calm a few of you down on the federal side. The IRS lets you keep up to $250,000 in your profit tax-free if you're single, or $500,000 if you're married, as long as it was your main home for the past 2 out of the last 5 years. And those 2 years, they do not have to be back to back. They don't have to be consecutive. For most people, that wipes out almost the entire taxes on that profit. But if you've owned your Orlando home for a long time and it's appreciated like crazy, which a lot of Orlando has, your profit could sail past that shield and you could owe federal tax on the overage. If that's you, talk to a CPA. That part is genuinely beyond what I can advise you on as a real estate professional. Now, let's talk about the real reason why a lot of you guys are stuck. It isn't logistics, it is your interest rate. This is that emotional trap that I promised you. A lot of you locked in somewhere between 2.5% to like 3% in 2020 or 2021, and that's incredible. Rates hit a record low of about 2.65% in early 2021. That is incredible. Today, that same loan would cost you 6 to 7%. So moving doesn't just mean a new house. It means giving up the cheapest money that you will ever be offered in your life. That interest rate is probably never coming back, and you don't want it to. Let me tell you, you do not want it to. When you go from a 2.5% interest rate to a 6.5% interest rate, it feels like setting cash on fire. So people freeze. I get it. That 3% mortgage is brutally hard to walk away from. And what do? They will stay in a house that they've already mentally checked out of. But here's what I want you to sit with. We are letting a line on a bank statement run our whole lives. People are turning down the job, staying away from the grandkids, passing on the fresh start that their family actually needs, all because they're emotionally married to an interest rate. So hear me on this. A rate is a financial tool. It's not a life sentence. The right move is to weigh what your life is actually worth against the rate and not to let the rate quietly make the decision for you. And before someone says in the comments, I'll just let my buyer take over my low rate, that's an assumable loan, and most regular loans cannot be assumed at all. On certain government loans, FHA, VA, USDA, it is possible, but it's not guaranteed and it can be painfully slow. And also, if your house has appreciated in price a lot, that buyer will have to come to closing with so much of a down payment that a lot of the times it's just not attainable for most buyers. And if this is starting to feel like a lot to manage on your own, good news, you are not supposed to do it alone. The right agent does not just list your house. They quarterback the whole thing. Your lender, your title, your closing team, your movers, and a real estate attorney in your destination state if it needs one. A good agent turns the scariest move of your life into a handful of phone calls you barely have to make. So here's where I can really help. If you are here in Central Florida, Orlando, Oviedo, Winter Park, Seminole County, Maitland, Chiliota, Geneva, anywhere in the area, and you're thinking about selling and moving out of state, I would love to sit down with you. No pressure, just walk you through your home and your real numbers. I can bring that net sheet that we were talking about. And if you're moving out of state, here's something I'm really proud of. Through my vetted agent network, I'll personally connect you with an agent in your destination, someone that I would send my own family to and help you line up the rest of your team. So don't just work with whoever picks up whenever you call on a house that you like on Zillow. Reach out to me and I'll pair you with someone genuinely excellent. My contact info and booking link are right down in the description. And if this is helping you, please go ahead and subscribe. I cover this stuff every week and the rules keep changing, so I'm going to keep updating you guys. All right, let's get into the actual playbook. This is the heart of the video. So how do you actually pull this off? It starts with one question that decides everything. Can you afford to own both homes at once, even for just a month or two? And here's why that matters so much. If you buy your new home before you sell an Orlando home, the bank counts both mortgage payments against your income. That is your debt to income ratio. So how much of your monthly paycheck is already spoken for. And most people simply cannot qualify for carrying two mortgage payments at once. So let me hand you 5 tools that'll get you around this. Once you know them, the paths make total sense. And in just these examples, let's pretend that you're moving out of state, just to keep it clear. Tool 1, the contingent offer. So you make an offer on a new house with a string attached. You buy it only if your Orlando home sells first. I love this option. It costs you nothing. It fully protects you. The downside is in a hot market, depending on where you're moving to within the US, sellers pick the buyer with no strings every time. But in a slower, more balanced market, like a lot of areas that we're seeing in 2026, sellers are accepting these again. So it may be back on the table. Tool 2 is the HELOC, the home equity line of credit. Think of it as a credit card secured by your house. You set it up before you list, you draw out exactly what you need for the down payment on the new place, and you pay it off the day that your Orlando home sells. So rates are running around 8 to 10%, but you only pay interest on what you are actually using, and setup costs are low. 2 catches. It takes 2 to 6 weeks to set up, and you have to open it before your home is listed. The day that a lender sees that your home is already on the market, they will not approve it. This is a plan ahead or lose it type of situation. Tool 3 is the bridge loan. I also like this option. This is a old muscle car version. This is a short-term loan that uses your current home's equity to fund the new purchase. It funds fast, usually 2 or 4 weeks, but you have to pay for that speed. So rates run roughly 8 to 12%, plus your origination fees, which is like 1 to 3% of the purchase price up front. A 6-month bridge can cost you somewhere between the mid 5 figures all in. It's powerful because it lets you buy without a sale contingency, but it's the expensive option, and you still have to qualify to carry everything at once. Tool 4 is the modern buy before you sell program. Newer companies that essentially guarantee the purchase of your Orlando home, which lets you make a strong cash-like offer on a new place with no contingency. The clever part, because they guarantee your sale, your new lender can ignore your old mortgage payment. So the debt to income ratio trap disappears, which is fantastic. The cost is a program fee. It's typically a couple percent of your home's value, and usually you have to use their partner lender or agent. For someone with great equity who just cannot qualify for 2 mortgage payments on paper, this can be the bridge that makes it all work. And tool 5, which is one of my favorites right now, and I feel like no one's talking about this, is called a recast. Let me show you with a real-time example. So let's say that we have Dana and Marcus. They've got a 2.5% mortgage and they want to move, but they can't stomach giving that rate up. So they buy the new home with a small down payment, they move their family, and they carry both for just a short stretch. Then, and only then, they list their home in Orlando while it's empty, while it's staged, which will almost always sell for more. And then when it sells, they take a big pile of that equity and they do something that most people have never heard of. They don't refinance, which would mean a new loan in like maybe a higher interest rate with lots of fees. Instead, they ask their lender for a recast. Lenders rarely tell you about this because they lose money on it, but it's 100% legal. The lender takes your lump sum, applies it to what you owe, and it recalculates your mortgage payment at the same rate that you initially locked in. The payment drops, the mortgage insurance often disappears, and this couple never moved twice, never paid for a bridge loan. I love it. That is the move for 2026 if you can temporarily carry 2 homes. Now, 4 actual paths. I'll give them to you as personality so that they stick. Path 1, the safe one. You sell first, bank your cash, then you rent for a little bit, or you stay in your own home as a renter. You can like rent back from the people that you bought your home for like 30 days, 60 days, where then you can walk into the new state wherever you want to buy. I don't know why you're leaving Florida, but okay. You walk into that new state with the exact number, you know exactly how much in closing costs and down payment that you have. The trade-off is that you might move twice and you might live out of boxes for a stretch. This is the path for thinner equity, nervous stomachs. There's no shame in it. In an uncertain market, it's one of the smartest plays that you can make. Path 2, the convenient one, you buy first using the HELOC or the bridge loan to unlock the equity that you have in your current house, and then you sell second. So you only move once, you never live out of a suitcase, but you carry the cost and the stress of 2 homes until your Orlando home sells. And if it sits, then that can get expensive fast. So this path is really for my people with strong equity, you know, steady nerves, and people who are willing to pay for convenience. Path 3 is the riskiest. This is a simultaneous closing. You're selling and buying at the same time, timing both deals back to back. I actually did this today, so I know what I'm talking about here. A lot of people do this, especially in the Oviedo area. Your home closes on Monday and the new one closes Monday afternoon, or maybe it closes Tuesday, and the money and moving trucks flow right through. You absolutely must negotiate a rent back here for breathing room unless you enjoy gambling, which my clients today did because they loved the house so much, but they could not get a rent back. And if one buyer's financing hiccups, the whole chain can collapse. We call it the domino effect. It's very doable. I have been involved in plenty of these, but only with the right teams on both ends. Okay, the cost that everyone forgets. Quick gut check before the deal killers. You've budgeted your selling costs, you've budgeted the new down payment and maybe new insurance, but almost nobody budgets the thing that physically gets you from point A to point B, the move itself. And across state lines, it's not cheap. Here's what's real in 2026. For a typical 2 to 3 bedroom home, a full service, long distance move where they pack it, they load it, they drive it, they unload it, that truly is the good life, will run you anywhere from about $4,000 on the very low end to about $18,000 or more, depending on how much you do yourself. A big 4-bedroom going truly cross country can sail well past that. Movers price by weight and miles. So every box you don't bring is money back in your pocket. If that made you cringe, same. And here's how to bring it down. The DIY route. Renting the truck and driving it yourself, that can cut the majority of the costs, but it's stressful. Moving in the off season can save you 15 to 25% on average, and booking 6 to 8 weeks ahead can save you another 10 to 20%. The point, fold the move into your real net proceeds before you go, because that $5,000 or $10,000 comes right out of the same pile that you're using for your down payment in your first months in the new place. And if you're on that sell first path, renting for a few months while you're like house hunting in your new state, storage in transit will not cut it, because we're talking weeks or months. Here's what a lot of people don't realize. The big moving companies, they do offer long-term storage too. They'll pack your whole house, they'll hold it in their climate-controlled warehouse, and they'll deliver it once you've got an address. One company who handles the whole chain, which is absolutely fantastic, they'll handle pickup, storage, final delivery. So you're not scrambling to like rent a storage unit and move everything twice. It costs a monthly fee on top of the move, but for the sell first crowd, it can be the difference between a calm transaction and living on top of boxes. Ask about it whenever you're getting quotes, because the price and terms can vary a lot. Now, the part that I promised, the thing that quietly sinks moves. Watch the theme. Everyone is preventable, and everyone gets caught by the right person on your team while you sleep. Killer 1, the employer letter. If you work remotely and you're buying on that income, your new lender will often demand a signed letter from your employer confirming that you're allowed to work from the new state. Plenty of companies are not set up for payroll in other states, so they refuse. And your loan dies before closing. Confirm with your HR before you write an offer. And if you're self-employed and you're moving your business, underwriters can treat it like a brand new startup in the new location, even if you've run it profitably for years. So talk to your lender early and ask them about those specific questions. Killer 2 is insurance, and here's where Florida flips the script. You already know how rough our insurance market is here. The good news for you as a seller leaving, a lot of the places people move to from Orlando have dramatically cheaper insurance, and that can be a very, very pleasant surprise. But don't assume. Some destinations have their own surprises, wildfire zones, that sounds terrifying, flood zones, reassessments. In a recent national survey, about 1 in 5 people buying or selling a home had a deal fall through over home insurance. So get an insurance quote on your new place before you even write the offer, not after. Budget the real payment, not the one that you're imagining, or the one that ChatGPT says that you're going to be having. Killer 3 is closing date culture shock. Florida closings are pretty disciplined. When your contract says the 15th, you generally close on the 15th. But several states, parts of the Northeast, especially New York, you guys know, if you're watching this video and you have sold real estate in New York, my hat goes off to you. Those New Yorkers treat closing date as like on or about, and your closing can legally slide by weeks. That would drive me crazy. That's just like not the case here. If you are timing a back-to-back move in one of those states, you can end up sold here and not sold there. This is exactly why you want a sharp local agent and sometimes an attorney in your destination state. They do this every day. You don't. Killer 4 is the property tax surprise at your destination. Here in Florida, our homestead exemption and our Save Our Homes cap have probably been protecting you more than you realize. Your assessed value has been capped while you own the home. When you leave, many states reassess your new home at the full purchase price with rates that are far higher than you're used to. Your loan might fix your budget while the tax bill quietly breaks it. Run the real numbers for your destination before you fall in love. This one catches Floridians constantly because we are very spoiled by the homestead exemption. If you suck it out till the end, thank you, truly. And no matter which position that you're in, whether you can carry 2 loans or you can't, a lot of people can't, whether you're getting the safe route or the high wire act, the risky ones out there, the smartest move for everyone is the same. Build your team before you make a move, not after the wheels come off. A great agent on this end, a great agent on the other end, a sharp lender, a solid title team, and a closing team, the right movers, an attorney in your new state if you need one. Get those people in your corner first, and everything else on this list gets a lot smaller and a whole lot less stressful. So if this helped, do me a favor, like this video, subscribe, turn on notifications, do all the things, because I cover this constantly and the rules keep changing. And share it with the one person that you know who's sitting in a house they've already left in their head, and maybe they're sitting on because they do have that 3% interest rate. They might need to hear this. If you're in Central Florida and you're starting to think about a move, my info is in the description. And if you want to see what your Orlando home could actually net you, reach out to me. Bye.